This is going to be fun, folks. You're going to forget that some of this stuff happened in 2023. It was certainly an interesting ride throughout the year, and let's try to fly through some stuff for folks. We're going to do this over not only this segment, but the next. And you think about what has happened, and you really have to start with really the bank crisis that started early in the year. And sometimes you go, wait, man, that was this year already?
I know. I was just thinking about that as far as it felt like it was almost a couple years ago. But we did start with the financial crisis, a mini crisis where Silicon Valley Bank, that was the big one that ended up failing because they had a lot of depositors from these private equity sponsored companies who, they're in a close community and they got a little worried about the balance sheet health of that bank. And so they just pulled their money out rather abruptly.
Right.
And
modern day bank run.
It was, exactly. At that point, it was called Twitter, I think, before they changed the name to X.
Right.
But yeah, it was
my
kind
question
of
is
Twitter-driven.
if it's Twitter and now it's X, are you Xing? Are you Twittering?
You're
I don't
tweeting.
even know.
You're still tweeting.
All right,
Yeah,
sorry
I
about
haven't
that.
quite figured that one out yet. It's probably best that I stay off of Twitter because I have lots of opinions that I probably shouldn't share. But it was a modern day bankrupt. That's a great way to put it. The Fed stepped in along with the Federal Deposit Insurance Corporation to make sure that depositors were taken care of. And actually, interestingly, every press conference that Chair Powell has had since then, he has really come out and said our banking system is healthy. He wants to really reiterate that this was unique and specified and localized to those banks.
Yeah, kind of like the Jimmy Stewart in It's a Wonderful Life, folks. When he was having a bank run, of course, that movie was just on for Christmas. And of course, then we moved right into really the dominant conversation, which was AI and Chat GPT. It was a term that most people have never heard before.
It was, and that was really fascinating as far as how Microsoft made a big investment in OpenAI as far as with this Chat GPT, so these large language models using artificial intelligence, where, artificial intelligence has been around for a very long time, but it was really exciting as far as some of the breakthroughs that were made to make it more accessible. And, I use Chat GPT pretty frequently. I view it as a nice research assistant, basically. It's kind of like having a graduate assistant to help you out with summarizing different things. But
well, that's
really
good for you as a PhD, a professor. For me, I've never had such a thing. But I get the point.
Yeah, but no, like NVIDIA, that was, I think, the big story as far as when they released their earnings, and they were a blowout earnings report. And it was on the back of a previous quarter where they really disappointed. So they went from disappointment to really something exceptional. And that got a lot of people excited about this isn't just going to have a payoff over the course of a decade. It could be a payoff over the course of months or quarters. And so that really set off the Magnificent Seven, having a tremendous start to the year.
And not only was it a tremendous start, but it really carried the performance of a lot of these indexes throughout the year, including the S&P and the NASDAQ.
It did. The concentration was a big topic of conversation. I kind of break up the year into three different parts, and we'll obviously be getting into all of those. But the first part of the year, driven by those 7 large stocks, really based on expectations for growth from artificial intelligence. And then it left a lot of the other companies and stocks behind. If you think about the bank index, that was down 40%. Well, the NASDAQ was rallying about something equivalent.
And you talk about not only the big stories of the year, but you really can't get away from it in what Taylor Swift really did. I know that you're a big fan of Swiftie,
I'm wearing the T-shirt.
You're wearing the T-shirt, but her tour throughout the year made an economic impact.
It did, yeah. So around the same time that we had that Silicon Valley Bank filing for bankruptcy, basically, she was starting her tour, and it carried through the summer, and it was really surprising about how many people were attending that and the economic effect that it had on the communities that she visited. It showed up in the GDP data as far as the just surge in services spending, which is related to travel, tourism, and concerts.
One of the big announcements was in May of this year when Dr. Brian Jacobsen joined the team. Boom, dropped the mic right there. But of course, that was a big story. Thanks for joining us. But weight loss drugs were a big story. Of course, you don't need them, but they were a big story. Drove the performance of Lilly, for example, up 50%. But then the bank story continued with J.P. Morgan buying First Republic.
Yeah, that was really fascinating that J.P. Morgan had to step in and buy First Republic, because back during the financial crisis, I actually remember St. Patrick's Day 2008, that's when J.P. Morgan bought Bear Stearns. And so it was like they kind of stepped up again. And you did have this phenomenon in the banking sector where J.P. Morgan really sucked a lot of deposits from these small regional banks. And I think that was really one of the lingering concerns for the balance of the year, was whether or not the deposits coming out of these smaller regional banks going to places like J.P. Morgan and to money market funds where you could get significantly more interest, if that was going to really serve as a brake on growth, seeing a type of credit crunch. And so at the beginning of the year, people were worried about a recession, right. And then it almost seemed like, well, maybe this is going to be the catalyst to a recession that never actually happened.
But then Janet Yellen and the rest said, we will stand behind them. And they actually backstopped a lot of the banks. And of course, that kind of went aside. But then a big story came. And of course, Hollywood went on strike. And when's Yellowstone coming back, were all of the concern. But really, a lot of those stocks did get tanked.
It really did, yeah. And actually the strikes, the writers' strike, the actors joining together, and then eventually we had the United Auto Workers strike as well. There was a lot of discussion around whether or not labor was going to be a big issue going forward, and what does that mean for profit margins? Were people going to be demanding higher wage increases, eating into profit margins, and then that would be a headwind for the markets. But that was a fear that never really materialized, because yes, workers did get higher wage increases, but it wasn't anything inordinate. It was actually something that seemed somewhat justified when you look at productivity growth.
Yeah, I know, but there was a lot of talk, you'll remember, about the UPS and everything, and FedEx and the rest of those companies. So we went from strikes that everybody was talking about, from strikes to hikes.
That's right. Yes. So from strikes to the Fed rate hikes, thankfully, Chair Powell had what we call the Powell Pause at the end of July, and nobody really believed that it was a pause. I mean, we did when we were talking about it on our investment committee, thinking that the Fed had gone far enough with the rate hikes. Economic numbers were showing signs of fatigue, not necessarily dipping into a recession. Inflation was falling. We had gone from 6.1% inflation at the beginning of the year to ending at something closer to 3%. So a lot of progress had been made, and the Fed could justify a pause, and that's what we had at the end of July. But one of the most memorable things to me was when the Treasury came out and they announced that they were going to be issuing a lot more debt than people were expecting, because we crossed $33 trillion for the national debt. And all of a sudden you saw interest rates go from below 4% on the 10-year Treasury to above 5%. Mortgage rates go up to 8%. And so it almost looked like we were going to have a repeat of 2022 with a bond bear market. But thankfully, that was something that it was very short-lived.
And those are the two big stories right there. Of course, not only was inflation at 6% beginning of the year, but in the middle of the year previous, it was 9%.
Yes.
And this last reading showed 0.1% for PCE. So that's really an annualized number somewhere in the neighborhood of 2%. So they're kind of at the target, which then, of course, drove the bond market, and that catalyst drove the stock market.
Yes, that's right. Yeah, it's wonderful how this is all interconnected through these big stories where you had inflation going from 9% in 2022. We're getting close to the Fed's target, the Fed being on pause, and interest rates coming down, fueling the market rally. So that's really, it's almost like this year where it's all's well that ends well as far as the rally. It really broadened as well, which I think is kind of an important thing. It went from being very narrow to much broader.
And it's going to really set up the story for 2024. I know there's some stories that we're just not going to get to. We did talk about from strikes to hikes, and of course the strikes that we did talk about were more about Hollywood than they were about the UAW strike, which was a big story.
It really was. As far as the United Auto Workers, really, it was unique, the approach that they took to the strike, as far as going after the three big automakers at once, but almost like this rolling strike. So it wasn't like everybody went on strike at once. It was just enough to disrupt production. And there was some concerns about whether or not that was going to really hobble the economy. Manufacturing has spent a good chunk of the last year and a half in a recession. And all of a sudden, if you have a strike, does that prolong it? Does it make it worse as well? Now, thankfully, they came to an agreement. But when we looked at the automakers in general, it did seem as though it affected the economic data in the latter part of the summer. So they went on strike basically in September. It affected the October economic numbers, but we got a really good bounce back in November when it came to manufacturing production. So it's almost like they went on strike, but when they came back, boy, did they really just sort of put it into full gear.
And speaking about having a disagreement and then finally coming to an agreement, the circus in the House was a big story, it was the lead story almost every day.
Yeah, and that unfortunately was the story all year. If you remember back in January with then House Speaker McCarthy, I think it was like 15 rounds of voting that it took for him to actually get the speaker's position. That was a record. And then all of a sudden, he struck a deal in terms of lifting the debt ceiling, and then he was let go. There was that vote of no confidence, or he was removed from the speakership in October. Then it took a while for the new speaker to really get seated. And it's just been going from almost one crisis to the next, which is maybe a kind of an interesting prelude of what we can expect as far as for next year. But I'm getting a little ahead of myself.
Yeah, and then we're going to talk about 2024 in just a second. But of course, the story, talked about crises, and that really moved to October 7th when Hamas invades Israel, and it was one more unrest that we began to see. And obviously what has happened from that, it continues, and we talked about just the other day, the Red Sea.
Yeah, the Red Sea is a very important area as far as its connection to the Suez Canal, where a lot of the trade that goes between Asia and Europe has to go through that area. And when Hamas attacked Israel on October 7th, there was some worry about whether or not it would spread and what it might mean for oil prices. It does seem that it has spread because now we actually have some attacks on ships going through the Red Sea. The United States has worked with a number of allies to try to provide some protection there, but it still really is hit or miss as far as the extent.
Well, it's funny that you say that, hit or miss, because it's like Battleship. You remember the game back in the day, and they're trying to hit the USS Carney and the Mason. They did get support from other countries, but it is hit and miss. You've missed my battleship, and that's happening every day in the Red Sea, which is causing concern, for example, to energy.
It is, because of a lot of the flow of energy through there. And so we've actually seen energy prices on quite a roller coaster. It went very high up in July with OPEC production cuts. Then it came back down, and now it has begun to rebound again. And so this type of volatility, it's really evident at the pump, which affects people's perception about inflation when you look at the gasoline prices as far as the roller coaster that those have been on as well.
And let's just stay on energy just for a second. There could be another pipeline incident in Russia. We do know what's happening in the Red Sea, of course, the unrest in Israel. And, here's a story that's brewing is Venezuela is talking about trying to seize part of Guyana.
I know, Venezuela trying to seize that, and then also Brazil entering OPEC in 2024, but then Angola exiting OPEC. So lots of unrest as far as with these big energy producers.